Just make sure you have it. All right. Check, check. Quick sound check. Can everybody hear us loud and clear? It says no audio. So Dolby, just make sure you have. Oh, no. There we go. We're good now. We can hear now. Awesome. Thank you for bearing with us. Welcome everyone to At the Buzzer, our market recap. If this is your first time here, the goal of this segment is to review what happened in the markets for the day. We may talk about some markets that you have not traded before, but we believe our goal as traders is to identify opportunity, see how we could have taken advantage of those opportunities while managing our risk. Running the show a little different today. We know the Topstep team is going to Vegas in a couple of weeks. So Dolby Time is going to be running a takeover. So this is Dolby's At the Buzzer takeover right now, just running the stream. So bear with us if there's any issues or anything like that. We'll figure it out. We're doing it live. But if this is our first time meeting, I'm Coach Jay. Been a Topstep performance coach since June of 2023. Been trading for the past 13 years and in the futures markets for the past 6. That is Coach Paul. Go ahead, Coach Paul. Go ahead and introduce yourself. Dolby, they can't hear you if you want to unmute your mic.
Hey, I am Coach Paul. I've been with Topstep since April of 2023. I've been involved in the futures trading industry for 4 decades. I'm here to share some of my experiences and knowledge and perhaps help you become a better trader.
Awesome. Thank you, Coach Paul. And I think, Dolby, they should be able to hear you as well. Let's see. I have Andrew checking on that for you. Okay, so if you want, Dolby, if you want to try to focus on that, I'll run through our intro, and then we'll go from there. So let's talk about the markets today. Let's talk about the markets. Let's look at the news. I know we did have some planned news out earlier this morning. We had a U.S. consumer confidence number that came in. All these consumer confidence numbers are coming in lower than expected, Coach Paul. 98.3 when the forecast was 102.5. We know Michigan sentiment has been coming in lower as well. And the markets are responding by selling off with them. Outside of that, I didn't see much news. I see we're getting some Trump headlines right now. But what about you, Coach? Anything you see on the news side?
Well, much of the same. The last 3 days since Thursday, it's basically almost the same trade. Sell it early, buy it after the first half an hour, or cover it, and slosh around. That seems very, to me, methodic, almost by design. But these ranges, they happen in the first half an hour to an hour.
Super quick.
It's the same thing. So we're marching down. This is breaking on regular news. There's no FOMC news. So I don't see anything that's going to change it. We're still under the 200 moving average in the half hour. I'm trading it from the short side.
Awesome stuff. Give me 1 second. I'm going to pull up a 30-minute chart, Coach. If you can take a look at this, I have that as. Actually, let's go through the top percentage movers first, and then I'll leave this 30-minute chart up. We can take a look at it. So we have 35 different markets we can trade with Topstep accounts. To the downside today, we had crude oil down 2.19%. Micro Ethereum futures down 5.83%. And shout out to the scouting report. Coach, you're like Phil Jackson. You're like who do we want to compare you to?
You can just stop there.
Like
John Wooden and Phil Jackson.
You're like Hoodie, Phil Jackson, whoever you want to say. If you guys remember Coach Paul's scouting report from yesterday, it was a sell in micro Bitcoin, biggest percentage mover to the downside, 6.3%. We'll talk about that one a little bit. To the upside, we had Ultra Bonds up 1.59. Copper up 1.95, and natural gas up 3.67% for our biggest percentage mover to the upside. Coach Paul, I got a 200 moving 30-minute chart up here with the 200 moving average, 20 and the 50. Talk through this one a little bit, and I am going to help Dolby with this audio.
Okay. Well, NASDAQ. Well, I was
Can
saying
you hear me?
earlier, it's much the same pattern. We started last night. White line being the 200, purple line being the 50, and the yellow being the 20. Simple moving average. You can use an EMA if you like.
Think they got you now, Dolby?
Hell yeah. We're good? I think we're good.
Hey, we fixed it. There we go. We are good to go. Chat,
right.
thank you for
It's like a
bearing with us.
practice account.
We're-
Struggle
Hey,
well and
it's
learn.
It's a practice account. That's exactly right, Paul. That's exactly
Yeah,
right. No, we're good.
That's how we get better.
That's exactly
We struggle well, and then we get better. So good job, Dolby.
I said it's low. We'll fix that.
They said you're a little low if you want to check your levels, but let's see what we got here. We're working on it. We'll do it live. All right, Coach. So we got the 30-minute opening range right here. What are we looking at?
It's sideways action. We didn't leave the opening half-hour range. You know what is noticed last night? It started in Europe. Europe sold off. We came back, and this is shout out to you, Coach Jay. Right back to the opening range high.
Right back to it.
And reset, like a reset. And this is where the volume comes in on the opening in New York. Right?
Yep.
I mean, now right off the bat, we saw it again at the half hour before the opening, from the 8 to 8:30. If the selling begins, and we did it again. Had a 1 hour break.
Yep.
VWAP doesn't leave the first half hour's range.
So rinse and repeat.
Right back up. It's like a big automated trade, like someone's dumping stocks.
Yep.
And it's picking up speed. We talked beginning of the week, there's no volume on the buy side. The volume is on the sell side. It smells of liquidation. Maybe Dolby could do a speed
sure.
song to smells like liquidation.
Yeah. I think I fixed the audio too. It should be better now. I upped the dBs, so it should be a little more balanced.
Awesome stuff. One thing I'm looking at in the equities here, we've been talking about this candle for 2 months. December 18th daily candle. We closed outside of it. That's where we had the 3 daily dojis up at the highs. We started the sell-off. We asked the question yesterday, do we give any credence to the NASDAQ being down 6 days in a row? Do we see a bounce or continued sell-off? Now this makes 7 with these daily dojis. We closed outside of that range for the first time in a long time. And man, these markets look really heavy. I know MP was on TopstepTV this morning on Fast Markets. He was talking about the 200 moving average on the daily chart, which is down at 735. We did mention that yesterday. 21,000 acted as a support today, but man, these markets look very heavy. Not seeing a bid in them at all. Yeah.
I think we were kind of talking about this range, I think yesterday, actually, on this very show. About the, if you go to a really big time frame in the indices, especially in NASDAQ, and hold on, I'm also the producer. I'm gonna do that one. Look at this. Okay. And let me turn off. Cursor is chart plots?
Charts and data.
Charts and data.
And then show executions on the bottom left.
Oh,
they're saying your audio is a little.
It's still quiet?
Go ahead.
It shouldn't be quiet.
Yeah.
It's like green into yellow. I can add a little bit more, but it is maxed out right now. Let me add even more dBs, chat. How many dBs can we add? Keep on bumping it. And bumping and bumping.
It sounds okay. I was listening to it.
Is it getting louder right now or no? I'm peeking into yellow now. It should be a lot better.
All right.
Hey.
I think we go with it. We'll figure it out
That's weird.
after the
It's not
fact.
that far away.
Yeah, it sounds good to me here.
Okay. Anyways, it's better. It's getting better. Okay, I'm bumping up the DBs.
There we go.
Okay, so we were looking at yesterday was this massive range that we were in the what is this, NASDAQ weekly time frame, a huge chunk of candlesticks all stuck together. And kind of what we were talking about is like, can we bounce at the midway point? We didn't. And then our next target was kind of like 800s down below. And like what you can do with big range trading is, you know, you can put yourself in the shoes of higher time frame players and be like, hey, if bulls up here are bailing, then there's a lot of room all the way back to the downside because of how big the range is. And ranges typically go range to range, or it goes range to half, or like range to out of range. And so we're kind of getting down to a point with 21,100s or even 20,800s where buyers finally might start coming back in. But the way I've been seeing this, and I didn't see it this way yesterday, but today, is continuation shorts because longer time frame players want to push price down to see if longer time frame buyers can come in. This is a massive market, and there's always someone bigger in the market than us, especially if we're trading one lots. And there are buyers who will come in at 20,800 and they have no problem waiting. They will wait for price.
Yep.
And so we kind of have to understand the whole context of what's going on, and big time frames can do that for us.
100% agree with you there, Adobe. If we can go back to my charts real quick, we'll go over the morning trade. So we had the 3-minute opening range. I will pull this up here, take these moving averages off for a second. 3-minute opening range here, and like Coach Paul said, it's been the same pattern, right? Rinse and repeat. We've seen this over the past couple of days. Patterns are patterns until they break. We're getting closer to the low end of that range, where we did bounce off of 21,000. But same idea here, right? Short off that opening range, 21,400s. We've seen the similar move up at 21,800s yesterday. Market pushes into a major level. There are no convinced buyers, and we just sell off. Now, it wasn't the cleanest sell-off, and I know the team on Fast Markets this morning was coming in looking for buys, and I don't blame them, right? We're somewhere near the low ends of this range, but there's just not another convinced buyer in these markets right now. A couple decent long opportunities off the lows here, right, where we got these volume spikes, and the market pushed up. And I know Dakota took part in longs. He was buying the entire way down. Again, shout out to Dakota for managing his risk. I think he took 10 trades during fast markets, lost 9 of them, and ended up profitable.
Oh, that's really funny. There was
wait, time out.
Yeah.
Time out. Repeat that.
Took 10 trades during fast markets, lost 9 of them, and ended up the day around $7,200. So shout out to Dakota. Just managing risk, right? Managing risk. We talk about it all the time. Win rate by itself is not a stat that you can base your strategy on, right? Because we see traders all the time win 80% of their trades, and then one trade blows out the entire account, where his is the exact opposite. We had Coach Vince on last week who talked about a profitable strategy that wins around 18% of the time, and over time, if you let it work, was up about 28 grand or something like that. So taking small losses, he kept buying it, and we all know Dakota at this point. He's a permeable. And when the markets are selling off 5% in 2 days, he's trying to find a spot to buy it. And there's a way to do that, right? If we're watching it on the stream, it looks crazy. It's like, hey, this market is just cratering and this guy's buying it. But if you manage risk, it truly does not matter what trade strategy you use. Ultimately, the principal, coach, is to not lose the account.
It's a testament to what he preaches. Process over profit.
Yep.
And he doesn't flinch. And I'm saying, in a principle, it is staying alive, surviving.
Yep.
So you can easily, when you're learning how to trade, get really frustrated. You take 9 trades out of 10 and still remain in the process. I mean, that's big lesson.
Yep.
That right there. first of all, he didn't put on such a big position that his account was threatened, and that
That was
is
the key.
relative. It's relative to the size of the equity in your account. Because it's so tempting when you're in a spin like that to go, hold my beer. I'm buying 5 minis. I got to
Yep.
make this back. The hell with I'll buy another combine, or the hell with it. I have to win. No,
Yep.
you have to follow the process. So, it's easy shouting out Coach Dakota, but above all that, the principle is he follows his process. And in
Yep.
that process, he allows himself to be wrong multiple times. Learn that lesson, and you can be a successful trader.
Good stuff. Let's see. After that, we did get a bounce. I do want to take a look at the S&P real quick. I know the house account did take a short.
Oh,
I actually really,
we had a
yeah, I know,
heartbreak.
Dolby. I know we got to talk about it.
Yeah, we
We
do.
had a short, and I actually really liked that trade. I know there was a couple of traders in the Coach J chat that took it as well. Just looking at something that happened. Again, patterns are patterns. Here's the 3-minute opening range here in the S&P. I think we got short somewhere around 87s with a stop at 93. I
Yeah.
really like this trade for a couple of reasons, right? We were pushing back up into that opening range, 3-minute opening range. VWAP for the session was below where we were. So the way we're looking at this is, price is kind of floating on empty volume, and the potential to revert back to that volume was there, right? I think this is just a case of we had a stop that was a point and a half too tight, and it didn't work out, but the trade was valid. Now, going back to yesterday, really quick, this is something that we've seen again. What is that volume telling you in relation to the price action? We got the same exact move yesterday, right?
Yeah.
Where we pushed up into that opening range, volume is lower. Worst case scenario, we can trade back to volume on a rejection of that opening range again, which I think, if we're just reviewing a house account process, maybe we give it the other side of the opening range. But I know at that point we were already kind of down on the day, and that is a little bit of hindsight talking. But the trade idea was valid. I was actually in the chat, Dolby, getting ready to say, add another one at 93s. But but we got stopped out right there.
Yeah, it was a really cool trade idea. I'm trying to annotate my charts fully so I can actually go through. Jay, can you just cook for a little bit longer, and then
Yeah, I got you.
so I get these charts annotated?
My question
Go ahead,
is, the
Coach.
stop, was it based on a price or how much you were willing to risk? And I'm
It
not
was. So the trade idea was from Isaac. However, it was my idea to average down in the trade because I felt pretty confident that we were going to stair step lower. We did stair step lower. We were just off by like a point and a half. But it was a good. But he risks 10 points, right? So it was a 10-point trade. 10 points worth of risk on that trade. So we followed his risk profile, but we sized up using our profile. Had it been like a personal trade, and maybe if I had a little bit more time, I probably would have looked left and seen that there was a more support becoming resistance potential to the left side. And so maybe I would have taken some of those orders and spread them further up. But once I finish annotating this chart, it'll make a lot more sense. So just give me just a moment while I do that.
It's interesting in there is we talk about the same pattern.
Yep.
And then it just zigzag.
Right back to that opening range.
So reversion. Let's talk about reversion trades. If in the half hour bar, VWAP never left the range. So what can we take out of that? What does that mean? Well, the heavy sellers, the selling that was moving the market stopped, because in the equation that you have to have more volume of selling for VWAP to continue to go down. I hope that makes sense. So in the first half an hour, I'm sorry. Is that the half hour or the hourly?
Yeah, this is the half hour on the S&P, Coach. I think the
Okay.
Nasdaq looked a little bit different.
Um, and even there,
It's flat.
there's there we did break out of it. Okay, there was follow through selling. Now, this is where reasonable expectations that we are day traders. It is so tempting to go. This one we could be 150 lower. It's the end of the tariffs are whatever we conjure up, but reasonable. We broke that half hour. All right. And there
Yep.
was more selling into new lows. If you sold that break, what is a reasonable profit? Well, if I'm looking at that 2 to 1,
So if you sold, so where would you be selling it, right? So on a 30-minute, if we're waiting for a close outside, the sell at this point is too late. Maybe you're selling it
no,
against this VWAP.
yeah, I want to sell against lows of the VWAP of the first candle
Okay, here we go. So right here,
because
72s, you're,
VWAP was right there at the time. So the sellers are active at that price versus at the lows. So the selling was a APR away. But the point is here, where it's the low of that first candle.
yep, right around here.
VWAP is right there. It's like pounding through it. But at the end of that candle, we're far away from VWAP. If you got a 2 to 1 trade and in day trading, take the money.
Yeah. You don't get a 2 to 1 here if you're risking two ATRs on a 30-minute. This is where I say trail your stops.
Okay.
Right. If the market's giving you 30 points in the S&P, I'm not leaving with zero. Worst case scenario, I take 20 points out of that trying to trail as it goes. But like you said, Coach, that VWAP flattens out, and then we see the market come right back into this range. Where the house kind of just got stopped out there. But
Yeah,
your charts up.
I'm good. Yeah, I got everything up here, so I can kind of explain what we were seeing, and you can here I can do a little like heartbreak emoji up here because that's where we got stopped. Okay, so the general idea. So we sold two at this is ES, so I'll just do the last four. So 83.75, we sold two at around this 5-minute candle. Like no, a 1-minute chart. Here it goes, better. Okay, so we sold 83.75. Then we sold 86, and we sold 91 and a half. And we knew we were going to have a 10-point stop. So I was comfortable adding risk even though it was going up against us because we were pretty confident in like our stop location. And so you can call this like dollar cost averaging, but essentially what we were hoping for is that this range to not fail. And so we were trying to sell up into this range hoping that sellers would come in off of it. So that's another reason why we sold up here as well, because it's like, oh, if it's going to do a little stop run, maybe it will just stop run 90s and then roll over again, and then we're back in a really good trade. And the reason why I like doing this is like controversial if you, I don't know, it's sort of controversial, but I don't mind doing this because we're only adding a little bit of extra risk if we're selling 2 points below our stop. And if we're selling 5 points below our stop, that's adding a little bit more risk. Our full risk is the full 10 points. And so we're adding more contracts, but we're reducing the risk and we're not moving our stop. So that's how we got up to, we were into 6 contracts. So I'm missing one, but I'm assuming that there was another contract sold somewhere around here in addition to the other 5 that were already on. The issue is what we didn't notice, or I didn't notice, and I wish I had, is the support that became resistance, which is essentially right at 59.94. So I'll just draw this little box right here. That was kind of the missing key. If I was a little bit more cognizant of the ES charts at the time, I would have taken up more of these sells and pushed them further up the ladder to get them closer to these support levels, assuming that sellers or buyers, sorry, that buyers who are long are getting an opportunity to cover before it sells off again. And we were 2 points away from essentially that exact scenario happening. So it was the right play, the right sizing, right strategy. We were just 2 points off with the stop in our average down. And we did end up getting the move that we wanted. If I can get rid of all these charts here, it'll be even, sorry, all the drawings, it'll be even clearer. Oh, there we go. Right, so now it looks so obvious in hindsight, which drives me absolutely insane.
The one thing I would say there, and I like to think about, is the whole number level of 6,000.
Yeah.
Let the market trade above a whole number level. And again, you had 6 contracts, so you know how much are we willing to risk dollar wise.
Right.
But if the buyers aren't convinced enough to trade above 6,000, again, this is in hindsight, but we can make that decision in real time, right? If we're thinking about it, where we're setting a stop where the market didn't trade to. Again, we're talking about 1.5 points. You said it the other day, Dolby. You know, trading is a game of inches. Right?
It literally
where
is.
You had the right idea. And that's just it, right? Broke the hot streak for the house account, but that is okay. We can always get back to it tomorrow. I'll be on Fast Markets tomorrow trading with Jerome, so I'm excited about that. Anything else you got on the equities, either Dolby or Coach Paul, and then we'll move on to gold.
No, that's all I wanted to cover for that. This was actually the only house account trade that I placed. I think Jack placed a lot of them in Fast Markets. He's not here to cover them. Got chopped up, but this was a really sort of I think interesting trade idea that's leans more towards the advanced side of trading, sort of like dollar cost averaging down into trades, reducing risk, sizing up, trying to manage it like that. And when it works amazingly well. But sometimes you get stopped out by a couple ticks and it's complete heartbreak. But you know, it's interesting, kind of interesting strategy. You know, you can try it if you want, hop into a practice account and try dollar cost averaging down, but you really got to know your levels and have confidence that you are understanding what's going on in the charts. You still have to have your stops and kind of prove it areas.
The average on that, Coach Paul, I'm just going to shout you out real quick here. The average on that trade, Dolby, was about 90, right?
I would say approximately. Yeah, we probably got in at 83 3/4, and I bet our average got up to around 88 or 89, if I had to guess.
Got you. Coach Paul, you know what I'm going to say here? And we say it all the time. I got to remind myself to use it every once in a while too. 3-minute ATR is 6.5 points. 2 times that is 13 points. And that sounds like a lot of risk, especially with 6 contracts, but it's so far out of the way that we don't see that stop get hit often. It's something that I want to try to use a little bit more. Yeah, if I'm, guiding house account trades, right, is using that 2 ATR stop, because if we get good trade location, we want to let it work. And it is a lot of risk, but I think what we can do also is if it starts to get to that point, right, that 2 ATR risk on a 3-minute chart was above 6,000. If we trade above 6,000, we can cut it, right? It was at 603. But again, just a lot of this sounds like hindsight, but it's how we plan to take trades in real time. And I think that is something I want to keep in mind.
Well, hindsight review is hindsight. If you're not reviewing your trades or you don't review a trading plan, how are you going to execute it well?
I'm not going to know what to do, right? Just clicking for randomness.
Yeah. And I mean, if this was like a personal trade, this would be a really easy journal entry. And I think it'd be a necessary journal entry because I think it's easy to get into a trade like this and then beat yourself up afterwards and think, oh, I'm a shitty trader. I'm not good at this. And it's like, yeah, you're kind of unlucky. Let's be honest. Like, it was 2 points. Really wasn't that bad, bro. You know what I mean? It's like, let's pump the brakes a little bit. We don't have to hate ourselves because we got stopped out on a trade that really would have worked. However, there are productive notes that, we could write here, which would be, maybe look left a little bit more or, to have 2 different time frames up and kind of see where your trade is relative to maybe a 30-minute support and resistance or an hourly support and resistance. And just making that one note might be the difference between a losing trade and a winning trade next time, because if we get the setup again, the next time I'll be like, hey, I made this mistake. So now I'm going to look left and see if there's any levels that maybe are a little bit more attractive for buyers or sellers to come in and start moving price around. And then that way, if we do dollar cost averaging again, we can rearrange where our stop is, where we're adding extra contracts, and then we can improve a little bit. And then hopefully this type situation doesn't happen, and then it's a big winner the next time.
100%. If we can go back over to my charts real
I
quick,
got you.
I just want to share one more thing about the S&P. Shout out to Ishmael in the chat. Says we can see in the weekly chart that this week's ATR is 2 days is equal or more compared to the average. It's a great point. We talked a little bit last week about anomalies in the ATR, right? We had those 3 doji days, which were all lower than the daily ATR. And if we understand how averages work, if you get below average ATR, then you got to get above average ATR to get back to that average. So far, the first 2 days of this week, we've seen above average range days, right? High to low yesterday was 70 points in the S&P. The ATR is 68. And then today, high to low, the range was 90 points. And again, that range, the average is 70. So at what point do we see some consolidation, if at all, to keep us at that average of 70? Tomorrow we have NVIDIA earnings after the close. Anything can and will happen, but I would not be surprised at a consolidation all day waiting for NVIDIA's earnings, just to plan a little bit for tomorrow. But we spent a lot of time on the equities here. Let's move over because there was a ton of other stuff moving.
Yes, there was.
Where do you want to go, Coach? Digital gold or the physical?
There's no such thing as digital gold. Give a digital ring to your fiance and see what answer you get. Let's go gold.
Here is gold. I got it up on a 30-minute chart. And what are we looking at here, Coach?
Well, let's start. Last night we just kind of whimpered around. Wasn't.
There's last night's open.
All right. Hone in on that. So, took about 4 hours to break out. But once we had a small range. And once again, that range was the high was made in the first bar on a half hour. So we can make some. There's not. The buyers are not showing up.
Yep.
What's happening to VWAP after the first? It's incrementally going down on light volume. We have the breakout. And what time was that? That was at midnight.
This is
Eastern
at 10 Eastern. 10 Eastern right here.
Yeah. Well, volume came in. In Japan, we had a couple reports. Seems like affected that. Yeah, that was their PPI.
Yep.
We could go to bonds too. Let's get moving. Nice move. Now let's see what happens when the U.S. came online. Let's go to the 8 o'clock.
Here is, let's go down to a shorter time frame. I'm gonna go to a 5-minute chart so we can look at the 8:20 Eastern time, 7:20 Central open. Here it is right, where is it? Come on, where are you? Right there. Here's that 5-minute candle. And I think the team on the opening call took this long, which was a good trade to start. Good trade to start the day.
2-1 there, I believe, on the 5-minute.
Correct. Correction. I believe they took a short on the 1-minute opening range breakout short and got stopped out of it. That was the actual trade. But here we go. Back to that 8:20 open, Coach. Here it is. What are we looking at here?
Put the anchor that VWAP. Stays with it. VWAP stays within. The price came out, but when VWAP left, I mean, that was like a $10 rally.
Quick too.
Quick. And this market is, it's giving both sides ample opportunity. But on those highs, and we talked about this a few days ago. Was there big volume on that high? Anything that sticks out?
Couple big volumes
Not
there.
not at the high. Really more so at the lows. Let's look at a 3-minute chart since the 1 minute lies to you, lies to me. But not so much at the highs,
Yeah.
really. I think what happened here is I think we had a little case of the white line syndrome over here,
Ah,
where we have that 200 moving average, which we've talked about. And we started to close under it, and it's been acting as a support this entire week. How many times are we going to get a test of it before we break? And today, that's what that was.
well, here was the difference. The 20 bar moving average crossed the 50 and the 200.
Yep.
So short term, we were losing momentum, but this was a great play early to blow that up. And what I did on that buying, where it closed above
hmm
200, I believe it closed above by like, yeah. But now, if it was good buying, what should VWAP show us?
Should be ticking to the upside.
It should be ticking. So even if you buy it, I'm looking to buy it. Well, let that at least break those highs. It closed above it, but VWAP was not reflecting that there was buyers.
Mm.
And actually, if anything, there was probably some failed buyers.
Yep,
Because yesterday we made the all-time high, right?
we did.
Before
Yeah,
we had a
all-time highs. Yes.
$30 break.
Yeah, it's just getting heavy.
This was a little different, but that 200 was really key. And it brought in volume. This seemed to me like, well, that the commodity play is being liquidated. Gold, crude oil, grains, um, inflation products were getting hit.
Mm.
Reflected in 10-year bonds had a huge move. So overall,
Now,
in a larger picture, I see this as liquidation. But
yep.
that was a great trade. I mean, even if you wanted to buy it, if you were just reading the volume with VWAP, don't FOF FAFO
Coach,
FAFO. You call
what
it.
what have your basketball players been teaching you? Teaching you the young kid acronyms FAFO.
Yeah, FAFO. In trading, there you go. You could buy it, but we talk about risk management. First of all, it would be 2 ATRs, but do I get some new information before it hits that stop?
Oh, for sure.
Absolutely, I do. Taking good losses if I bought it, or letting it ride if I sold it.
For
So
sure. Yeah, really nice
let's
here.
go ahead,
Go ahead, Coach.
I was going to say, when you're done, let's go to the daily, see if we get any new.
We've seen the gold do this before,
Yep.
where we have a little bit of a wick on the bottom of this daily chart, but this daily, even with that wick, engulfed the last 4 days range in gold.
It's stalling up here,
It's
though.
heavy.
Now, I would put the 20 bar moving average.
Wow, it almost broke the daily range and got back up within
there.
the daily range in the same period. That's crazy.
Yeah.
So it bounced off the 20. I would have to say for this to make a bigger move down, we have to settle under the 20.
Yeah, I agree
For the
with you.
shorter term momentum to fail, and it's not. So is this a good buy?
It's been for a year and a half, but it's a tough one with it looking this heavy. Dolby, you
It's a
want to
big
bring up
day in
any
gold.
chart? Yeah, I think so too, Coach. Dolby, you want to bring up any gold charts, or should we move on to the next market?
Yeah, I'll throw in my 2 cents.
Yep.
I think yesterday we were talking about how tight that daily range is in gold, and we
Mhm.
ended up breaking pretty violently out of it from high to low. So it's actually kind of a good example of what it looks like when a big range breaks, so like a daily range, because we're really focused on kind of like the last 3 or 4 days of this daily range chart. And we opened at the highs, and then we reversed all the way down out and below. So let's say you're a gold trader and for whatever reason you decided to get short up top, and it happened to work very, very well. But you could see like take profit 1 at the halfway point of the daily, take profit 2 at the end of the range, and then if you had a third, there was a massive range break all the way to the downside. And the longer time frame the range is, the bigger the breakout is out of it. And that's kind of what you saw today. Now, what really surprised me was the fact that it extended all the way out and then damn near got all the way back up inside the daily range that it just left for a $30 move. So a lot of opportunity in gold today, and there was a killer cheap short in gold. So this is a really good example of how, hey, we identified a range. If we have a bearish bias, all we got to do is just set a stop right above highs, and then anything to the downside is going to be profit and potential. So you could have risked, let's say, 15 or 20 in gold and got conservatively, let's say
40
50,
points.
40 or 50.
Right.
You know what I mean? That's 3 to 1, 4 to 1 risk reward just by doing a little bit of just setting up a range ahead of time. Powerful stuff, but I mean, gold has been crazy today.
Yeah, huge move. And like Coach Paul just said, tomorrow is going to be a very interesting day. I'd be looking at this 30-minute candle right here, which was our highest volume 30-minute candle of the day. The high of it is 29.49, the low 29.19. 50% of that is 29.35, we'll call it. Let's see what the market decides with this range. We're trading back through it now. Can we close this imbalance, or do these sellers continue to sell and push us a little bit lower?
Yeah. So, yeah, I think what do you have? Like 29.30s approximately? That's kind of like that important level.
Yep.
Yeah, and that makes
Yep.
sense because that's the base of the daily range that we were talking about yesterday during At the Buzzer. So totally makes sense. On board with you on that one. Also, your charts are still up, Jay, so feel free to move on to a new market here.
Awesome stuff. We're going to go to micro Bitcoin from here because that was on Coach Paul's scouting report. But Coach Paul got a question from the other Paul, Paul H. Hit the like. If you haven't heard that, hit the like. It's in his name. Hit the like. Also, let's get us to 148,000 subscribers if we can. If you're not already subscribed, go ahead and hit that subscribe button. Shout out to Danielle Oliver. It is her birthday.
Oh, yeah.
And if you
Happy
guys know
birthday.
Danielle, she's been talking. The team has been talking about getting Topstep TV to 150K subs. I don't know what happens at 150K, but
I have no idea.
150,000 friends sounds like a reason to celebrate something. So let's get there. If you can help us out, 148 subs for Danielle's birthday. Shout out to Danielle. Thank you for everything that you do for all of us. Let's go to micro Bitcoin here, Coach. I'll pull up the chart. Coach Paul, you're a basketball fan. And there's this clip of LeBron talking about Kobe during the Olympics in 2008, and he said, "Anytime Kobe did this, it meant give me the ball and get out of the way." So I'm going to do that one for you. You
wow.
called this play perfectly. If you were watching At the Buzzer yesterday, this was on Coach Paul's scouting report. I know for a fact that he traded it. So go ahead, Coach Paul. What are we looking at here?
Well, coming into I was on the scouting report where let's go to start with the daily was really the we talked about it, the double top and a neckline. And finding these levels, I find it easier to use a line chart because it gives me I come from the school of the settlement means the most. So if we go through there, yep, those prices, and we have a double top, and the second half of that double top was a big sell. right? And we have not recovered that. At the
Yep.
bottom of that range we were into yesterday, and this market to be um, is being liquidated.
Yeah.
And we're looking at the ranges as we bounced off this neckline. It was like that is the definition of a dead cat bounce. Look at that. 1, 2, 3. And I saw that. I'm like, risk reward. This was um going to the 30-minute.
I'm gonna go back to candles on the
Mhm.
30. But what do we got here? I mean, right off the open last night.
Yeah, it gap lower, a gap and run. So we're under on a half hour. We've been under the 200. We're under the 50 and the 20. With that
Holding that 20.
neckline was right there. I guess maybe there were some Bitcoin traders who were watching at the buzzer because they didn't.
Hopefully, if they were long, they got out. You're welcome.
Because there it was a gap. I was kind of stunned myself. I did sell it a half hour before. But
Very
let's
nice.
look what happened on the reaction. Held the high the first half an hour.
Yep.
Broke out of it, and the liquidation. Where did it begin? What time was it? I think that was midnight.
2 a.m. Eastern time, so this is 1
Yeah.
a.m. Central. Yeah, never recovered. Like, and I think this is exactly what you talked about, Coach. When we break that support at 90,000, spot Bitcoin right now is trading at 88,750. We've been talking about this. It just looks heavy, right? There's no one buying it above 100,000. The last test of 100,000, we didn't even tick it on the futures. And at some point, buyers start to sell when they're not getting favorable price action. And where this takes us, we got this little gap here. We know there's not a gap in spot prices, but it reflects the futures prices 80K. Doesn't
Yeah,
seem very far off right now.
the 200 moving average on the daily is what I think 77. All in all, there's a theme happening here. Liquidation, Bitcoin,
Everywhere.
gold,
The equities.
right? Corn, and it's being done in decent volume. So this was that I'll take that trade and risk an ATR, 2 ATRs to get 4. You know that. But that had the DNA of what I call failed buying, or it had a great probability of liquidation.
Come failed moves, come fast moves, right?
Wow. Thank you, Dolby. Can you say that again?
Come failed moves, come fast moves. So
man.
that's actually, I think, a Brian Shannonism long before I think he ever was even writing Anchored VWAP. I was following him on Alpha Trends when I first got started. But I heard him say that, and I was like, oh, shit, that actually kind of makes sense, right? If you get a bunch of people anticipating a move above 100,000 and that move doesn't come, well, now you got a bunch of buyers who are panicking and they start hitting the sell button, and the selling begets more selling, and then that's how you get that failed moves come fast move, because no one wants to be the bag holder long, because they start seeing everyone else bail and they want to bail too, and then you get this cycle perpetuating of sellers coming in. So we couldn't get above 100,000 like you said, and then buyers start looking around and it's like, oh, we're not doing this, are we? And
I'm
then
the only
they
one here.
all bail, and that's what you got.
I define that when in the pit. If like if I was a floor broker and it was quiet, and all of a sudden I get an order from a large customer, sell 1,000 at the market. They're like, but you don't really want to do that here. I can't just. We'll talk about liquidity, and a
Yeah.
bigger trader goes, "I'm not asking you fill it, or I'll find someone else who will." Right? Well, no, okay. The first thing you go in and you go to sell just 50,
Yeah.
and what's going to happen is he goes. Let's say, for instance, it's even bid at 5. I sell 50 at even, and I go. Someone goes, "I'll buy 2." It describes what you just said. Everyone's long and I'm selling. I can't find anyone to buy it.
Mm-hmm.
Right.
So it's what's going to happen.
Got to sell it lower.
You got to start, and you can't worry about price. We call it urgency, right? So now I got to sell it. What's here? And you don't ask. This is where you're, first person to go, I want 50 up. Okay, someone says 90, sold. You don't give them it just with the first one, and then it begins. That's where you can see VWAP is now trending lower, because as the price goes lower, there's more volume. So the
Yep.
selling it's exactly what Dolby described, and I call it liquidation. And it's not an easy liquidation. So
No.
can this continue down? Well,
Sure.
yeah,
Definitely can.
it could turn around and make a bottom. We don't know. Reading in the present. All right. One of the things of reading volume leads price. Where the big moves happen, and we just described it, is when everyone's, I don't know if you've ever been on a boat where everyone's on one side
Mm-hmm.
and then they go to the other side.
It's called
Yep.
tilt for a reason.
It's called
Yes, it
tilt
is.
for a reason. It doesn't go gently.
Mm-mm.
So this was a classic example. We can see these types of things everywhere in markets. That's what markets are designed to do. This was an
100%.
extreme example. I wish if it was possible, I'd have one of those every day, and we'd all be rich.
Yeah.
But they don't come every day. It was
It was another
beautiful move.
really good example of a daily range break, very similar to Nasdaq a couple days ago, right? You have let me pull my charts up real quick. There we go. We had this real chunky, kind of Bitcoin between like 100,000 and 93,700, and buyers realized, hey, we're not doing 100K. Well, guess we're all heading for the exit, and then we had a massive sell-off. And so bigger the range, bigger the sell-off. So if it's a daily level, daily consolidation and it breaks out, you're going to get a big old move out of that range. And we did, and it sold off for almost 15,000 points. Bitcoins, right? 25,000.
Yeah, from the high.
Yeah, from 100,000 down to approximately 85. Yeah, so almost 25,000 off a daily range break. So, that, hey, come failed moves, come fast moves, right? So it's another kind of like tool in the toolbox that you can have if you can identify a range and then kind of maybe pinpoint that area where maybe buyers or sellers are way off sides here, and those like momentum traders get trapped. That means there's going to be a lot of opportunity coming, and it's probably going to come pretty fast.
Got a question here from Shay Hughes. Any thoughts on if the move is engineered by bigger players in the Bitcoin space, or do you feel it's a more natural occurrence on Bitcoin move down? It's hard to tell. There is actual volume behind that move, right? So whether it's one bigger player, if it's a ton of size, and people have been in profit since 20,000, right? Yeah, I would want to hold from 20 to 200,000, but if it's not going to go at some point, I'm going to take profits. Now you have the Bitcoin hodlers that aren't going to sell ever. But think game theory at the end of the day, right? I'm not going to hold this back to zero. without seeing something from it. So whether it's bigger players or, some, smaller investors, whatever it is, the overall consensus is that, yeah, we should be selling this right now. Now,
one thing I would add to that is it engineered by bigger players? Well, I would change that a little bit. Is the bigger players were finished buying? And
Yeah.
as Coach Jay likes to say, don't swim out in front of the shark, be behind it.
Mhm.
What I'm saying is that kind of thing, the bigger players aren't going to get in and out easily, and then so they don't, they stopped buying in beginning of the year.
Other question too, a question on the question is, does it matter as a day trader who is doing that? Because the only thing we really care about is price. I don't get a special price if it's a big player or a retail trader. So unless you're like looking at it from like a fundamental standpoint of trying to analyze are bigger players doing this, sure. But if you're day trading Bitcoin, you're probably just looking at 100,000, being like, hey, we can't break, and sellers all of a sudden come in. It doesn't matter who's selling it, and you don't really have a
players,
choice
small players.
regardless. Like, what the hell are you going to do about it? There's nothing. The market's selling off. It does not matter who is selling it. Your one lot is not saving this market, so you better figure out what side of this market you want to get on or not play, because it really doesn't matter who's selling it or who's buying it or it doesn't even matter what the reason is. All that matters is
100%.
price. At the end of the day, it's your risk relative to whatever your setup and trade is.
100% with you, Dolby. All right, we got 3 minutes left here. We're almost at time. Any other markets that you guys want to talk about? Shout out to D. She did call out whatever this spike was in copper as we were getting on the air just now. Copper, for whatever reason, spiked 3%. So maybe watch out for that tomorrow. I don't know why that happened, but maybe keep that on your scouting report.
Close.
Let's
look
on the
at
close.
A daily real quick. Looks
it
like
doesn't really look like much on the daily.
Oh, that's copper. Oh man.
Apparently, Trump news, mineral deals in Ukraine. Yeah,
Huh.
I don't have too much on this, but there was some volume that got traded in there. When volume is moving in a market, especially based on headlines, there's opportunity there.
Pretty clean stair step pattern in copper. I'll put my charts up real quick. Stair step is just higher highs into kind of a pullback consolidation. So kind of, I'd say stair step 1, stair step 2, resistance becomes support, vice versa. So this is, I would say, a clean uptrending market. You just start it right here.
Yep.
Where'd it go? Yeah, right there. Yeah, this is uptrending. So there's no reason to say, hey, this is going to roll over. I mean, as long as we're making higher highs and making higher highs and basing, looks strong. Looks pretty strong as a market.
Okay, I just saw that Trump launches commerce probe that could lead to copper tariffs.
Okay, that would do it.
Well, that'll do it. The T word.
The T word.
No market is safe from the T word.
Yep.
No market is safe.
So that comes out, and then this is the aftermarket for copper. I mean, market makers are, this isn't traditionally a high volume. This close, this came out at 3:00 Central as we were just beginning here. So thin volume. Let's see if it continues, but that market's in an uptrend. Buyers are in control in the short term. So, wow.
Interesting stuff. Got a comment here from Wi-Fi Millionaire, and we'll probably wrap it up soon. We didn't talk about crude oil, but crude oil is selling off. We're under that $70 level, kind of back down into that 3-month range that we've been in. We'll spend a little bit more time on crude tomorrow after the NVIDIA earnings, but it is selling off right now and looks pretty heavy. Question here. Let's get this one answered, and then we'll probably wrap it up. Let's get an opinion from all of you guys. Wi-Fi Millionaire says, I need 60 points to get back in the green on my XFA. Any tips for tomorrow? I'm gonna throw it to you first, Toby.
So you need 60 points to get back to break even in an XFA.
Mhm.
I would certainly size down. I think that's the first thing to do is size down and try to give yourself at least probably 5 to 10 trades if you can, and just start ticking away at it. Just try to get 10 points back at a time. Be really cognizant too of going on tilt and just saying F it, because that can really happen, especially when you're so close to losing an account. You just want to YOLO the whole thing to try to get it back all at once. I would just don't do that, because this is honestly a really, really good time to practice being a good trader, is when you're under the gun of having a 60-point drawdown. And you just want to focus on your process as much as possible, size down, get the 60 points out of your mind, pretend you're at break even, but still size down and just try to chip away at it. This is an incredible learning experience. Do not waste it. You will become a better trader if you stick to a plan and try to execute it and get through this. But just do not waste the opportunity to learn.
There we go. Coach Paul, what about you?
First of all, I think your mindset is misdirected. I got to get 60 points. No, you have to follow your process.
Mm-hmm.
In your process is your risk reward. We have no control of whether the next trade is profitable or not profitable. So what hijacks our mind is, okay, right away I'm down 10 ticks. Oh shit, now I'm down 70, because our mind is focused on getting back to 60.
Yep.
That is the DNA of tilt.
Mm-hmm.
Go back, focus on your trading plan. You might have to have 2 losses and then 3 winners in a row. But if your mindset is just to make 60 ticks, you're putting yourself in kind of quicksand. Focus on your process.
Mm-hmm.
If you're really concerned, like Dolby said, size down a little bit, because right now you're nervous, you're anxious, because in the depths of your mind you've probably blown out a combine or an XFA, and your biggest fear right now is that's going to happen again.
Yeah, I'm a very firm believer that traders can only fit one thing in their mind at a time. So to assess what you want that to be. Do you want it to be, I'm obsessed with getting 60 points back, or obsessed with passing a trading combine, or getting live, or a fight I had with my spouse? Or do you want to have that one focus be your process and plan? Because that's the only thing that should be in there, and nothing else. I don't think there's very many traders who are good at multitasking with having multiple different emotions going on at the same time. I can't do it. I haven't seen a lot of people do it well. So so just try to focus as much as you can on just the process. Everything else falls into place once you can do that.
Yep. I'll give my 2 cents. You said, I need 60 points. What can I do for tomorrow? My thought process is, what if the market only gives you an opportunity to make 10 points, right? Are you going to ask the market to do something bigger than what it's willing to do for tomorrow, right? Where we might go with outsized expectations for tomorrow's range. So again, trade your process, like, Dolby said, like Coach Paul said. You hear Dakota say it, process over profits all the time. Anytime we try to think with a monetary focus, we cloud our judgment on what the market is actually willing to present. And it may not be tomorrow, right? You might not make that 60 points over the next 2 weeks, but if you follow your process every day getting there, then like Dolby said, you'll be a better trader.
Mm-hmm.
I got nothing else. We have NVIDIA earnings tomorrow. So tomorrow is going to be a big day, probably after the close. We may get a guest on for that as well. We'll see. But anything you guys got before we leave?
One last thing. Follow your process.
There we go.
Yep. No, just shout out to Jay for helping me host at the buzzer, helping me get set up with everything. Just super helpful. You're the best, Jay. Love talking about trading, community, everything. It's amazing. So get to do even more of it next week. So looking forward to it.
Sir.
It should be a lot of fun.
Good stuff. I think it went very well, Dolby. I think you're ready for prime time.
Prime time, one and done. That's all I need.
But we'll see you, I think, sometime, one other time this week. But thank you, everyone, for joining. If you haven't done so already, hit the like button. Tell your friends and family to subscribe. We are on the road to 150K subscribers, but we got to hit 148 before that. Let's do it for Danielle Oliver's birthday. So sign up with those burner accounts. Trade well, manage your risk, and we will talk to you all tomorrow.
Oops.
Bye.